Hi all, welcome. Welcome. We're just going to give it a couple more seconds for everyone to trickle in. Greetings. We see the numbers increasing. Welcome, welcome. We're just giving it a few more seconds as we have participants join the webinar. Welcome. Okay, great. I think we have good attendance. We'll go ahead and get started. Welcome to ACG 101, our first event of 2022. We're excited to bring a panel on cryptocurrency, the industry, where it's at, where it's going. We have a wonderful group lined up with great moderation. I'll give just some quick background on ACG. My name is Dennis Clapp. I'm with JP Morgan in the private bank in Westlake Village. I'm also the president of the ACG 101 chapter for this year. ACG is a premier organization in the M&A, the mergers and acquisition market. We have 15,000 members serving over 100,000 business professionals worldwide. We focus our relationships and our connections in the 101 corridor, particularly from the Santa Barbara down through the San Fernando Valley area. So if you are joining us from this area and not part of ACG 101, we strongly encourage that we stay in contact, you reach out, we can make introductions with our chapter executive, and we have a full calendar of events lined up for 2022. Of course, being flexible with what will be virtual and what will be in person, but we're working on it and look forward to meeting with you all. I also want to thank all of the people and efforts and sponsors that go into putting on these events. They don't just magically happen. Our board of directors, thanks to all of them for their efforts that go into this on a monthly basis. And of course, our chapter executive, Michelle Henderson, and our annual sponsors, Calabasas Capital, California Lutheran University School of Management, the accounting firm Crowe, Union Bank, JP Morgan, intellectual property attorneys, Stubbs, Alderton, and Markiles, Carlton Fields, HCVT, and the San Fernando Valley Business Journal. So tonight, our moderator will be Josh Lawler, and I'm going to go ahead. Josh Lawler will be doing an industry overview. He'll be doing an introduction of our panelists. He is a partner at Zuber Lawler. So I'll go ahead and turn over the festivities to Josh to get us underway with introductions and industry overview.
All right, thank you, Dennis. Appreciate it. Feeling blessed to be speaking with an ACG chapter, having been an ACG member for many, many years in my incarnation as an M&A attorney. So my name is Josh Lawler. I am a partner at Zuber Lawler. We are a 50 or so attorney national middle market firm that, amongst other things, is very well focused on transactions in new technology spaces, including blockchain. I've been focused on blockchain for pretty much as long as there's been blockchain, but not quite intelligent enough to invest in it. I will preface, before giving the industry preface, that I also have my two children with me here tonight. So if you happen to hear any loud crashes or bangs in the background, that is what happened. And you know, it's all just going to have to wait. Alon's with me on that one.
I'm plus oneing it.
Right on. Yeah, it's COVID. In any case, before we go into kind of an industry background, which I'm happy to do, I do want to get our introductions out to our distinguished panel. And they are actually a very distinguished panel and very knowledgeable. So it should be a great conversation tonight. I'll let everybody do their own introductions. Alon, you want to kick us off?
Sure. Yeah. My name is Alon Gorin. I'm one of the founders of a venture fund called Draper Gorin Holm. We invest in early stage blockchain startups. So we started locally in doing the LA Blockchain Summit. And it's grown from a sort of Southern California community to realizing we could access this global network of amazing blockchain companies. So through all that stuff and over the years, I got to meet Jor and Josh and Phil now. And it's a great crew, and shout out to everyone locally here, because I'm born and raised in Agora and Thousand Oaks. So I'm staying here, raising my kids here. So shout out to all those sponsors on those things, because I live right by CLU. I heard that one on there, and I'm seeing a lot of attendees who are friends. So thanks for joining us.
Okay, Jor, you want to give your intro?
Yeah, my name is Jor Law. I was a corporate and securities attorney for about 2 decades, and then kind of ventured over to being an entrepreneur and just investing in companies. These days, I sit on the board of a company called Prime Trust, which is active in the crypto space, powers a lot of US-related crypto. I'm also an advisor for Infinity Ventures Crypto, which is an Asia-based venture fund that invests in early stage blockchain deals. I have spent quite a bit of time exploring the intersection of regulations and crypto, and spent quite a good fair amount of my last few years building infrastructure in this space. So, less pure crypto and more kind of in the intersection of regulation and crypto.
All right, thanks. Phil?
Hi, everyone. I'm Phil Liu. I am the co-founder of Arca Funds. We founded the company about 3.5 years ago. It's an asset manager based out of LA. We have 4 private fund offerings and about 600 million in assets under management. We also have a registered fund that is a U.S. Treasury fund that issues tokens on the blockchain that can be transferable also on the blockchain. So, that I think we're either the first or one of the first to do this anywhere in the world. So nice to meet you guys, and happy to participate tonight.
Thanks, Phil. So I realize I've been tasked with giving some industry background before we kick in, and it's actually a very large task. But I think maybe one of the best places to start would be, somewhere in the 2010-2011 zone, when I uttered what I think are probably the 2 stupidest words of my entire life. Those 2 words were tulip bulbs. I said that to 2 people who are now both billionaires, and I'm not. And the reason I start us out that way is because it really took me a long time to get to a point of overcoming skepticism to be able to make some of the statements that invariably I'm about to make. There's no real way that you can tell somebody something and suddenly they're not skeptical and they're ready to kind of dive right in. But if it makes anybody feel any better as they try to get through that themselves, know that it took me years of watching things happen before I kind of drank the Kool-Aid as to what was happening. So with that said, here's what's happening. If you were to go back to the beginning of time, or at least human existence, and check the guy in the cave or girl counting the mammoth steaks and the berries, that's a centralized ledger. And everything that has taken place between then and around 2009, almost everything, has been built on centralized ledgers. What that means is that somebody's keeping count of something. And you can look at economics, you can look at religion, you can look at society, certainly any governance. And what you'll find is that who has the count is very important and often the target for regulation and structured formations and everything else. It really does come down to that. And that's the paradigm that shifted when somebody came up with distributed ledger technology. I'm not going to try to explain how Bitcoin works and consensus algorithms. I think that was actually the mistake that was made a lot in the 2014 to 15 zone, when you have to understand how a blockchain works in order to understand what's happening. That's actually not the case any more than you need to understand how an internal combustion engine works to drive a car. we're at the point where you just take on faith that the internal combustion engine does in fact work. And that's kind of where we are with blockchain. Also, so when put in that context, getting closer to where we are, what you recognize is that it's a lot harder to find something that isn't going to be changed by the distributed ledger technology, which is the broadest term kind of dynamic, than it is to find something that is changed. Everything's changed. It's all changing. And that means one thing for people like Phil and Jor and Alon who are steeped in the industry, but it means a lot for people who are not also. And notably, as an attorney who's been in the securities world for over 25 years and doing mergers and acquisitions, a lot of your clients and your targets and such are going to be in part blockchain oriented, or going to have some aspect of their business that is tied to a distributed ledger, or possibly should be, and the competition does. So having some kind of rudimentary understanding just in general of how this stuff works and what it can accomplish is very helpful, I think, for everybody. And obviously, if you wanted to dive all the way down the rabbit hole, it's a very deep rabbit hole, and that's not the point of this particular session. But always happy to chat about it. And I didn't mention the words NFT or metaverse or any of those things, but that is where this all inexorably leads. So I want to kick it off with something that maybe Phil, you might be able to start us off with this. I noticed today that Gemini, which is kind of a very large, well-known cryptocurrency company that was founded by the Winklevoss twins of Facebook fame, announced its second acquisition in 2 weeks today. It acquired a company, I think it was called Omnitrex, something of that nature, which is a trading platform. And that's on the heels of last week acquiring a portfolio management platform. Not sure if you were tracking the news or that, or saw that, but wanted to just kind of get your take on where we are in terms of the financial community and its acceptance of blockchain, where it might be going.
Sure. Yeah, I'm aware of some of those transactions, and having worked in the traditional finance space, I still believe that we are in a stage of hyper growth here, where there's different players that are kind of realizing that there needs to be an integrated solution. So Gemini is an exchange, and now it's acquired a portfolio management company, and then a trading platform, realizing that just merely providing an exchange or a custody solution is not enough, because in the traditional financial system, everything's kind of integrated, and you want to be in a place where you're dealing with one counterparty, one prime broker. You don't want to have to talk to 5 or 6 different counterparties just to do a trade. And that hasn't happened in the blockchain space until recently. And now you've seen a significant amount of M&A in that space. And the interesting part of it is that those of us who started our companies, myself included, during the bear market, when people thought crypto was crazy, people in crypto were crazy, we're having a little bit of the last laugh here, because the lessons learned over the last 3 years in terms of what kind of things the regulators are finding to be acceptable or not, and what the tolerance is of kind of the skeptical public or the skeptical financial institutions that are involved. Those lessons are now coming to fruit, and you see Facebook jumping in first with Libra, then changing their name to Meta to address the metaverse. I'm hearing various companies that have approached us, public companies that have approached us to look at tokenization technologies that are completely, I don't want to mention the public company, it's not public, but they are, you would never think that they're looking at the blockchain, and they are now. and some of them are becoming very, very public. I mean, like I think Amazon is looking into it. Tesla with Elon Musk, kind of tweeting about Dogecoin and other things like that have, there are things going on behind the scenes that we're not all aware of, and so we're going to get to that tipping point where everything is just going to work, and you're not going to think about blockchain for the sake of blockchain. It seems just better and faster. And the only analogy that I can think of is back in 1995, everybody thought, those of us that were alive back then, but everybody thought that the internet was a scam, and people used it for pornography, for gambling, for drugs. And now, can you imagine the world without internet? I mean, it's impossible. So that's where I think we are right now. We're at that cusp.
And I forgot to mention, we do have the question and answer portal on. So if anybody has any questions, feel free to type it in there, and we'll try to work that in. I want to focus on Elon and Doge for a second, and everything going on there. Like Elon, in fact, this was headed your way. You see a lot of opportunities presented to you for investment. You're thoroughly steeped in the industry. What's your take on the meme? I mean, is it meme, or is it progress? I mean, what's really happening here?
So when the space started taking off and I started getting asked to do media and stuff like that, actually one of my friends dared me to say memes are money on national television. So I did it. But at the time I thought it was a joke. But what I've realized it's actually more true than we think. Like all of the crazy shit that Elon Musk tweets and says, a lot of the times I do think it's like a whole lot of nothing, and then people freak out. But I do think that at a certain point, he's smarter than we all could ever imagine, obviously. And I think that he knows what he's doing. And even Tesla marketing could be looked at in a way that think about just from the ground up. You look at Tesla as a business and you go like, how does it make sense? They don't have a car dealership yet. They're outselling Mercedes-Benz. Like they completely changed the way selling cars. And a lot of it has to do with this genius marketing that seems insane, right? It's like, why the hell are they selling tequila bottles? Why are they selling flamethrowers and doing these things? Because Elon Musk realized before any of us that memes are money, and they're building communities in a way that we really only understood the value of, or maybe some of us understood the value of, when the crazy Wall Street bets stuff went on. And all of a sudden you realize like, oh, all the crazy nerds on Reddit, some of us included, actually can make a difference in the financial markets, can actually screw over those big firms, or at least stand up against them in a meaningful way. And so I think from that standpoint, memes and some of that stuff are really interesting. It's a different way of creating communities, and communities are really the biggest value in crypto. But at the same time, maybe I'm a horrible, I always say I'm not a good trader. I point people towards ARCA and groups like that when they want to actually trade crypto or hold the portfolio of the sort of public tradable assets, because I'm an early stage startup guy. So I invest in early stage startups. I told all of my friends two things that came to bite me in the butt in terms of investment advice, which was, don't buy Bitcoin on your credit card. Which all of them are mad at me for, because they were asking me that when Bitcoin was like $3,000. And I told them not to buy any Doge. And again, they were very angry with me. So I stopped giving any of that kind of advice. But really, it's a game. But it's a game until all of a sudden Mark Cuban goes like, well, we're going to accept it at the Dallas Mavericks place. And and Elon Musk tweets about it. And all of a sudden there becomes some kind of mainstream acceptance of it as something real, kind of like Bitcoin was at the beginning. I won't say Doge is anywhere near Bitcoin. Bitcoin is much more serious. Bitcoin, I will tell people to keep in their portfolios and not just treat as a joke. But But, you know, everything is a joke until it becomes real, right? And they built real community around them. There's people that love it, and they're gonna go to war fighting for it. So you know, you can't discount it.
Right. Thanks, Alon. So a couple things. One, for anybody who's not familiar with Dogecoin, since it's been mentioned a few times, this is a token that was created by a person because they could. It literally had no purpose, and its symbol was this person's dog, which is a Shiba Inu. And the token took off to the point where it actually is used as a medium of exchange, and I think is certainly within the top 20 in CoinMarketCap right now, with no stated use case, no stated organization, no stated anything. Not to be outdone, somebody later came up with Shiba Inu coin, which also skyrocketed into a ridiculous position with, again, no purpose whatsoever. And a little bit of trivia, somebody a couple of years ago bought Shiba Inu with $8,000, and that has now turned into, I think, a 10-digit number, and is likely the most profitable trade in global history. Not sure who that is, but their wallet has been tracked. Jor, wanted to get your thoughts. I mean, you know, you're sitting on the board at Prime Trust, and you've seen a lot of startups over the years. You know, thoughts in terms of, you know, how, you know, Prime Trust kind of receives a inquiry from, you know, a company in terms of whether it has a real business case or whether it's just kind of doing something that's more meme oriented, and how, whether that's accepted or not.
Yeah, you know, from a Prime Trust perspective, I think our views are ever changing, right? You know, just because we've grown so fast, you know, the onboarding process was at one point, you know, the CEO, and, you know, at other points kind of Zendesk kind of empowered staff, and then, you know, more organized as of late. And it varies, as you all can imagine, depending on kind of the latest regulatory developments and who our head of compliance happens to be that year. So, you know, in general, Prime Trust was started, you know, with this idea that anybody could come and focus on their business, and without having to worry about some of the elements that they might otherwise have to build out. They would be able to just kind of tap into some of our APIs and launch more quickly. So you've got, you know, quite famous examples of like extremely kind of large exchanges that use our technology that kind of launched, you know, in a few months as opposed to a few years, or, you know, or companies that launched in a month instead of like a year. And in terms of kind of just coming on, you know, effectively, you just reach out to Prime Trust. We pretty much welcome anybody, and as so long as they kind of pass compliance and, you know, pay the requisite amounts to utilize us, you know, and depending on, you know, various, you know, business models, that really depends on whether we can accommodate them or not. In some cases, they need to grab some licenses before they can come back and work with us. In some cases, you know, we might determine that, you know, they're you know, safe enough to work with.
All right, so we do have some questions, and one of them is a nice segue from that. You've mentioned, you know, regulators a couple times. Obviously, I'm an attorney. I deal with the regulatory aspects, and you know, they affect all of us. We have a question from Matt Lendak. As decentralization grows bigger and bigger in crypto blockchain, are you concerned that the United States and other global powers will overregulate it to the point of stifling advancements? For example, if the SEC declares Ethereum a security. I'll kick us off, but we can throw that to everybody. So yeah, it's a horrible problem. And when I say it's a horrible problem, I don't say that I'm blaming the SEC for anything. The problem is that law does not keep up with technology. And, you know, that becomes more and more obvious. And the result of that is we've got the SEC with a twin mandate of protect the Main Street investor and maintain orderly markets. None of those have anything to do with innovation. So they're doing what they're kind of out there to do, which is to be protective. I don't think they're going to declare Ethereum a security. But that said, there certainly is a concern that we're falling behind. Phil, what do you think of the issues as far as regulation goes?
Well, I think that, you know, I think the SEC is in a bit of a quandary. They've sort of made a mess of it themselves, unfortunately, because this is from my personal experience, and I deal with the regulators on a weekly basis at least, including very senior members of the SEC. And I could say that there is two camps within the SEC. One camp believes that we should be making changes in the laws to accommodate blockchain technology, to allow innovation without kind of like doing a foot fault on tripping up on regulations. Fashion is kind of embodied in the kind of public talks that Hester Peirce, one of the commissioners over there, has kind of stated. And then there's the other side of the SEC, which is like they view that the existing laws are applicable to blockchain technology, and it's up to the technology to kind of comply with existing law. And so there's this tension within the regulators, and even outside of the SEC, which is the main regulator for securities tokens, there are other regulators like the Federal Reserve and the Department of the Treasury. And recently Jay Clayton, who was the former head of the SEC, came out with an opinion piece that kind of surprised me, and I'm sure probably surprised others, because I think when he was at the SEC, he seemed to be very conservative with respect to the law. But the opinion piece that he wrote in the Wall Street Journal essentially said that we must allow innovation in the blockchain space, and the tokenization of U.S. Treasuries was a very, very important aspect of supporting innovation in the financial system and blockchain technology. The funny thing is that we at ARCA have actually created an analogous product, which is the ARCA U.S. Treasury Fund. And so the part that I don't think people really got about that opinion piece was that it had nothing to do with securities law, other than treasuries are securities. But what it was saying was that it essentially was advocating that the Department of the Treasury and the Federal Reserve create a token that was a treasury token. Well, a treasury token, for those of us that are kind of like in the know on the securities law, is outside of the purview of the SEC. And so if that wasn't a wake-up call, I don't know what was, because I've been telling people at the SEC that, hey, you guys need to like take charge here and give ARCA some relief for this U.S. Treasury fund, because otherwise the Fed and the Treasury can take
no SEC bashing. It's too easy.
But no, I don't think it's SEC bashing, but I do think that that is that's the tension there. What it means is I think that regulation is going to move forward in a manner where it's going to be positive for this industry because of differing perspectives from different regulators and even within the SEC itself.
Joe, what do you think?
The industry suffered a lot, because we were dealing with kind of regulatory uncertainty, right? It's, people like you and Phil and I were out there trying to advise clients and or build things, and we weren't sure what we could build, and to some extent that stifled innovation a little bit, because other folks were in other jurisdictions were just building, and then so everyone cried for that, and then depending on which regulator it was, they started saying, okay, well, let's give you some clarity, and then everyone freaked out because the clarity wasn't positive. So then it really meant that we wanted clarity as long as it was positive, but the reality, I think, is that when there is some clarity, we know what to work with. Humans are, fairly smart. They'll figure out how to work around it. So I think clarity of some sort is better than no clarity, short of like absolute clarity that it's bad, right? So I do think that it's hard for, it's hard for regulators. The technology is advancing so quickly. Human behaviors are changing so quickly. What the people want and what the people need protection from and what they want protection from is changing from 7 decades ago, right? So we're trying to apply this old framework to kind of new behavior. The law can't catch up fast enough, and every time it tries to catch up, the space is mutating. So I do think we do see more regulation, and what that does will impact kind of projects differently, right? There's some projects where the tech is more focal, right? The idea of decentralization and the technology and blockchain, decentralized ledger, distributed ledger technology is more central to what they're doing, and maybe those types of projects survive. And there are some projects which really look like, smell like, investment, capital raises, and that's it. And they probably fairly should be regulated, right? Otherwise, if they're not properly regulated, then every project that isn't a token would just tokenize and be out of the law. So it's a delicate balance. I don't envy the regulators. It's easy for us to sit there and point at them. And I think I've even negatively tweeted about the SEC, which I normally am like a huge fan of. But they have a hard job, and I do think we will see more regulation. But I think I'm optimistic because over the years, Phil, I know you know this, Josh, I know you know this, Alon, you know this too. We've seen them becoming a little bit smarter. In the beginning, they really seemed very clueless, but over the few years, they've seemed to appreciate it more and understand it more. And some of them went from skeptics to not so skeptics, and not just because they went to the private sector and started getting paid big bucks, although that also happened.
That did. By the way, there's a couple of questions that are asking about what to invest in, and none of this is investment advice. None of this is legal advice, and I'm skipping over the questions that ask for, what cryptocurrency should I buy or anything of that nature. Just so everybody's aware. Alon, you guys deal with a lot of different companies with a lot of different technology kind of going forward. What would you say in terms of the position of the United States and kind of whether that may be pushing innovation overseas, for instance?
Well, yeah. See, I'm of my group of friends, of the people, I'm looked at as a little bit crazy because I love Southern California. I love the 805, for example. I do the 805 startups events out here, and we're doing, this is ACG 101, right? So I'd say between where Jor lives and where I live, 90% of the people on here live as well. And so we're here because we love this area, right? We think it's a great place to raise our kids. We love to be here. And what's really, really crazy is we've all have our friends, doesn't matter what side of the aisle we're on, doesn't matter anything, that have said for our whole lives, like, if this person's elected, I'm moving to here. If this thing happens, I'm moving to Canada, or this thing. And like, it's this thing that we've had our whole lives, and it's, everyone's blowing smoke up each other's whatevers, and it's not really real, right? Because we all stay here, we love it here, and whatever. But in the crypto space, it's the first time ever where I'm talking to people. I'm getting pitched on Zoom the last couple of years. I'm talking to someone, they might have an accent from the Midwest. They might sound like they're from Texas. They might just sound like a normal random American accent, not know where they're from, but I ask them where they are, and they'll be like, oh, I'm in Singapore. And then they're like, oh, I'm in Thailand. Oh, I'm in Switzerland. I'm in, a lot of places that aren't here. And what's crazy is that it's not like 1 out of 10 calls that I have. It's like half the calls I have. And then the other half of the calls I have are people saying like, I'm a little worried. Like, should I be launching this company here? Should I do this here? Am I going to get in trouble? And I think that most of the people, if they, talk to Josh or to Jor when you were doing law stuff, they would maybe be eased a little bit in knowing that at least if they follow certain rules, there's not a huge thing to worry about. But the general consensus and feeling amongst young people starting companies is that they're scared. They're scared to do it in the US. And a big part of it is the unclear, unsure regulation. And even the stuff that's becoming more clear and getting better is still, looking back on our crowdfunding days, Jor, we were really pissed off that there weren't rules and laws for people to raise money from the general public. Then they became available. Then they got a little bit better, but it's still offensive and weird that you can't take money for your startup from someone who's not a millionaire unless you jump through certain hoops. It still doesn't feel like American. It doesn't feel like the way it should be. And so, launching a token for some may have felt like they were circumventing something, but they're going to get in trouble if they broke the law and they're in the United States. And I wouldn't recommend anyone do it that way, just kind of willy-nilly. You need to talk to Josh or somebody who's an expert in it and do it right. But it is definitely amongst people pitching their companies, amongst the space in general. It's weird because I grew up in Southern California and all the cool kids club of tech companies, some of them I worked for. I worked at MySpace, I worked at Amazon and IMDb and stuff. But the smartest people in the world, the smartest engineers, all those companies were bringing people from around the world because they couldn't hire enough engineers, or they'd position themselves next to universities where they could hire engineers. Now, it matters less where you are in the world because we're all doing business on Zoom, and Americans are doing the opposite. They're figuring out how they can set up their shop in another country or move so they can from it. It's really weird. It's flipped, and I hope that the regulators catch up a little bit. Because they need to get a little more clear so we can move on. But you know what? I think along the same lines of what you were saying earlier about not knowing, the details of the blockchain, not having to understand the internal combustion engine, some of these things are going to happen behind the scenes. Some of these decentralized products are actually going to be decentralized, and you won't necessarily know that when you're trading on Coinbase, it's going through this product that some guys in Southern California might have built, but kind of is routed around the world and is decentralized. So the frameworks are getting easier. The building blocks are getting there. I don't want to completely scare everyone with my response, but it sucks as an investor because I'm investing in more companies that are run by Americans, not in the United States, than I am Americans that are here in the United States. It's weird, and it's not fun for me because I'm so all about California and I love it, and it's tough. But I think on a positive note, we do talk about, you mentioned metaverse and NFTs and things like that. Southern California in general has a huge opportunity in that space, having sort of Hollywood being here and IP being here. And I joked with the guys before we jumped on stage here publicly that some of one of my portfolio companies is talking about Bored Apes and things like that right now on a different thing. And the guy they were talking to was a guy named Crypto Painter, who's an Oscar-winning visual effects artist that's just killing it in the NFT space and creating opportunities where there weren't before.
Yep. Although if it's un-American that you have to be a millionaire to invest in a startup, it's going to be even more un-American that you have to be a millionaire to buy a collectible. That's where we're going with NFTs becoming, securities, unfortunately. I think, that takes us to another question somebody brought in. I think it's Ron Wade. Was interested to see the 10K question on TurboTax for 2020 filings. Any thoughts on US taxation position relative to crypto going forward? I think probably all of the panelists and I can agree that the IRS is looking at collecting taxes on cryptocurrency, and they've gotten wise to the fact that they can in fact track transactions to people, and they won the battle of subpoenaing records from Coinbase years ago. It's really just a question of logistics. The big issue that I've got, and I don't know who else can comment on it, but there's no like-kind exchange equivalent for cryptocurrency. trading, or digital asset trading, maybe is a better way to put it. For anybody who doesn't know what a like-kind exchange is, if I'm in an apartment building and then I sell that apartment building and not buy another apartment building within 6 months, I can defer the taxation on it. That's called a like-kind exchange. So for cryptocurrency, one of the major issues is that you can't necessarily just buy one cryptocurrency from another cryptocurrency. A lot of times you have to.
Dogecoin to Shiba, they
Right.
sound the same, they look the same. I mean, it's a
Yeah.
dog picture.
But some of them you need to buy ETH first before you can get to it, because the way it's offered, what have you. And every one of those transactions in the middle is taxable. They're all taxable events, even if they weren't really capital events. They were just kind of passing through. So the short version is, I think that the IRS is going to get very intrusive, and in some ways maybe they should. Hopefully they'll figure the rules out a little bit, but at the end of the day, I think they're really actually going to love the technology, because I suspect if you look at it in 10 years, that you're not going to have tax reporting the way you recognize it today. It's all going to happen more or less directly, which actually brings me to another current event topic. A congressional person from Minnesota introduced a law to forbid the federal government from issuing digital dollars, on fear that it would create kind of an economic, kind of 1984-esque type of situation where everything everyone ever did could be tracked. Any thoughts, Phil?
I do want to say the big common misconception, I don't want to dive into it because I think Jor and Phil are probably way better at going into the tax stuff and all that. The biggest, most common misconception when I'm like dropping the kids off of school and somebody's like, crypto, dude, like, and comes to me, is that crypto is used by criminals. It's not tracked. It's like all anonymous and all this shady stuff and whatever. And I know you mentioned it before, but it's still very, very common thing that people still think like, oh, I can do Bitcoin anonymously. They watch Billions and they saw them like give the guy $1 million in Bitcoin on like a USB. So like, oh, that's how you do shady stuff. You use Bitcoin. But I will say that at LA Blockchain Summit and the events we've done, we've had law enforcement agents from basically every single agency say straight up that they 100% of the time would rather the criminals they're tracking be using crypto, because it's easier to track, it's easier to trace, and it's easier to catch the ins and outs between banks and things like that. 100% of the time, they'd rather them be using crypto because it's easier to catch criminals that use crypto than use US dollars.
Yeah.
Still, our local here, who I agree with 99% of things, goes on stage and says the opposite of this, which is just funny because he's the head of the Investor Protections Committee. So when it comes to taxes too, you're not going to get away with it very long, because the government understands and knows, and they have law enforcement agents that know how to track this stuff better than probably almost anyone in the world, right? So I just want to throw that out there to anybody watching, because we dive in the weeds of taxes, but nobody's going to use crypto to avoid taxes, like in any way they don't already use dollars. Let's just say that.
Yeah.
Now you guys.
Yeah, I think from a tax perspective, right? Like, I think it is fair game. You live in the U.S. If you make some income and you're kind of part of the tax system, it's fair to assume that the IRS rightfully should come after you for some taxes for income or gains, etc. Where I think it gets a bit confusing or a bit kind of more unreasonable is when it becomes a burden to trying to track those, when the taxes kind of affect the ability to use the crypto for spending and things like that. When people randomly give you tokens to your address, even though you never asked for them and they're not worth anything. So I think, the IRS is just going to apply whatever law they can and get whatever taxes they can. And I don't necessarily fault them for that. They're taking some aggressive positions here and there. I don't particularly like that, but I kind of expect that from them. Where I think you'll see some movement, and you've seen some attempts in the past, is from legislative action, where someone might say, hey, we understand that it's annoying to go buy coffee and pay with Bitcoin. If every single time you buy coffee, that's a transaction that you have to report gains on. It's just burdensome to do that, right? You might see, for example, people try to pass some de minimis kind of threshold. Like if you spend, less than $600 worth of Bitcoin or et cetera, maybe you don't, they'll forgive you if you don't report that. The other thing is it's a shame sometimes when you have a crypto wallet, it's public out there. So, sometimes people just come randomly and give you airdrops. You don't even know you got them a lot of times. And, you're supposed to pay taxes on that. And I suppose if you got something super valuable, that might make sense. But most of the time, you're just getting stuff that's not all that valuable. But, they all could add up and be like $40 here, $40 there, $40 there. And you could have like $1,000 of these things, and you'll be in penalties simply because you never knew that you had it, or you never could realize it, because to get that $40, you would have had to spend $300 or something like that. So you might see some legislative action there that kind of overrides the IRS, et cetera. And that's probably where most people would fight to start with. But the other thing to figure out now with all these NFTs are what's a capital gain versus what's a collectible, because some of these are collectibles, and collectibles are treated separately from capital gains and things like that, right? So that might be a fight coming up in the future. Who knows?
Yeah. I mean, I think it's all going to break down into regular capital gains, short-term, long-term capital gains, and income if you're in the business of doing it. One thing that I'd like to throw out there is, people think about NFTs as collectibles, and that's kind of been mentioned a few times here in content. But really, it's a lot broader than that. And I'm focusing particularly on NFTs, so I'll get on my soapbox for a second. What you're really looking at is the equivalent of a VIN number for a vehicle, where the asset can be anything, and you can cut it up in many different ways and do lots of different stuff with it. And my take on it is it's a little bit like when we went from clay tablets to papyrus is the leap in terms of what you can do with NFTs combined with smart contracts. It's a lot more than just collectibles, which I mentioned because a lot of business models are going to come out of that. You're talking about things like consent. You're talking about things like admission or proof of authority or things that. Anyways. You get the idea. So on the subject of novelty, we have a question from Matt Spark. Every growing industry has their patent wars. Is the fear of patent litigation over blockchain technology somehow impeding growth of the blockchain industry overblown? I don't know if I'd go overblown, because I'm not sure that I hear about it every day, though I do know that Matt Spark is a patent attorney, so this makes sense to me. But there are a lot of patents being filed. No question. I don't personally keep track too much of what they're precisely doing, but I do sometimes wonder, in kind of an ethos where open source was kind of the rule for so long, what it looks like from that perspective. And if anybody's got any thoughts on patents, then Alon, if nobody does, I'm going to land on you, because you're the guy who invests in small companies who often need barriers to entry.
I will say that I think you're right that the general space, right, is all about open source. And when you hear about crypto startups, a lot of times they're patching a lot of different open source libraries to build something. And to clear that to people that may not know, open source software and libraries are like, somebody creates a simple way to connect your wallet on a website. They put it on a website called GitHub, and they just allow people to use it and make derivatives of it and take it and put it on their website. And somebody else might make a way to transfer a token, and they put that as open source, and you use it on your website, and you're allowed to, because they have licenses that say you're allowed to commercially use this, you're allowed to use it, whatever. And so, a lot of the products you'll see in the space, especially like a random NFT project, something like that, are a patchwork of open source tools and software they were able to kind of get for free and modify themselves. And what's interesting is, though, that I have ran into a few companies who had interesting patents. And most of the time it's kind of weird. And they look at it in the space as like, we're having this patent not to protect a bunch of other small startups and people doing good things from using it, or at least that's how they think of it today. But they're looking at it more to protect themselves from Wells Fargo coming in and, you know, wiping them out of existence or doing something like that. They kind of look at it like a little bit like Elon Musk talked about the Tesla patents, which I don't know exactly if that was ingenuous or not, but he kind of like opened it to the world and is like, we'll only really enforce it if somebody does bad with it, right? Which is very subjective. But I had a startup that recently was acquired by Coinbase. And one of the big technical due diligence things they did as part of the process was, one, their patent was important. It was a part of the deal, of course, and everything. But when they were being acquired, they had to go through every single open source library that they were using as a product, every single piece of code that they didn't write from scratch, and double check that the licenses were legit, that the person who posted it as that thing actually was the right. They had to do a lot of legal work, which you never really think of until there's that acquisition. And if something that was really, really material to their product was found to be something they shouldn't be using that they didn't even know about, it could have killed the deal, right? So most of what they built, the hard stuff, they had to build from scratch because their product didn't exist when they started. Now it's been actually copycatted a bunch of times. But you know, it's one of those things that are really, really important. I don't know. I've never heard a startup in the crypto space say they're not going to do something because they think it's already patented. And most of the time when I've been hit by like, I don't know if other people see this, maybe I'm seeing it because I'm an investor, but a lot of like people will hit me with like, we're this group that bought this patent, and because we bought this patent, we're going to make every NFT obsolete and they're going to have to pay us millions of dollars. And you're like, you're a patent troll and I'm not cool with this. And I don't think that's true because again, the cat's out of the bag. And the beauty of decentralization is that like, we could use like Uniswap as an example. They're decentralized exchange. The government can say, Uniswap, you're out of business. And the Uniswap website can go down. But the 1,000 of other products that I use that integrate Uniswap can't go down because they're on the blockchain and you literally can't take it down. Like you can't turn off Amazon servers and make the Ethereum blockchain go away. And that's the beauty of decentralization. So, you know, on one hand, you can enforce patents if they're being, you know, infringed against by US companies and things like that. But you can't really use them to stop the innovation or to stop some teenager who's anonymous in another country from using it, because they could just, you know, wave a certain finger at you and there's nothing you can do, right? So that's the weird, interesting part with patents in this space. I think in general, they're important to some degree, but the sort of anarchist punk rock kid in me wants to say like, who cares, just build. But you know, it's important. I'd still talk to Josh. We're in Southern California. I'd call my friends at SoCal IP or one of those others in town and ask them for their advice on anything IP related like that.
Right on. I like having talked to Josh better than so, but whatever, it's all good. So with that said, a little factoid, I'm not sure if it's still true, but at least in the United States, JP Morgan, #1 filer of patents in the blockchain space, at least a year or two ago, whatever it was. I think IBM was third. So somebody thinks they're
Get Dennis back on.
What now?
Oh, I was joking. Dennis is JP Morgan, right?
Oh, right. I'd forgotten that. All right, so another question we've got from somebody named Joe, no last name. I get the advantages of crypto and the technology, but what I don't understand is why the prices are so volatile. Why would retailers accept it as a method of currency when prices fluctuate daily? So I'm gonna start by saying that I'm about to get absolutely flamed on Twitter because I'm going to appear in a documentary where I say that Bitcoin is a failed use case. I will say Bitcoin is in fact a failed use case, in part for the reason that you're mentioning, along with the fact that it's just way too expensive and too slow to buy a cup of coffee. So its use case of being a medium of exchange, not really so much. And you know, the store of value thing I personally rail against because everything's a store of value. So why not pick one with the use case that works? But you know, the real answer to the question is right now retailers wouldn't accept it as a currency because it fluctuates like that, but there are a lot of payment systems that make that work. So, you know, for instance, our firm accepts Bitcoin. We don't actually even have a Bitcoin wallet, but it goes through a payment processor that turns it into US dollars instantaneously, and therefore we've accepted Bitcoin. So there are payment systems for it to work. Anybody else want to comment on that aspect of things at all? The volatility piece of it.
I think the volatility is what puts amazing groups like Arca in business, right? There's opportunity that comes from the volatility that maybe that's why it isn't good for buying coffee, and that's part of why you have capital gains tax when you buy a cup of coffee. But I don't know. I think there's products that make it work. Like I know Prime Trust enables so many of those, right, Jor?
Yeah, we touch a lot of the US dollar related crypto spend and things like that. Joe, to answer your questions directly, right, prices are volatile kind of in any new asset class and things like that. Over a period of time, the ones that stabilize and get adoption presumably would get a little bit less volatile as they become less speculative and more mainstream. Whether that happens to rich crypto generally or specific types of crypto, it's too early to really tell. As for why retailers would accept it, as Josh mentioned, there are plenty of ways for a retailer to accept it and not take any of the fluctuation risk. But the fluctuation risk was actually a big risk for many years before people could do instant settlement or things like that. So for many years, people would actually settle these things, at the end of the week or every few days or at the end of the day, and the fluctuations would change so much that you couldn't, you really would have to hedge the bet, because at any given moment you could lose 20, 30% on a bad day, or 50% even. But these days now it's gotten to a point where you have some systems, for example, like if you're going to spend $5, it'll tell you, hey, this will cost you X Bitcoin. And that quote will last for like 8 seconds or 12 seconds for you to accept. And if you accept it, exactly what the rate you're getting is. Or there are even systems like, if you use something like a Zap Strike, everything's US dollar denominated. So, so you could have Starbucks accepting Bitcoin, and you could go on Zap Strike and conduct a transaction in US dollars only. So you're sending Starbucks Bitcoin, but from your perspective, you're only ever sending US dollars. So you have no taxable capital gains or anything to deal with. And from Starbucks side, if they wanted to not hold Bitcoin, they could also immediately convert it to US dollars again. So there are ways to get around that, but the fluctuation is an issue that people had to work around. And I would say it didn't really kind of get worked out well until maybe like the last year or two.
Yeah, and on top of it, people getting paid in Bitcoin, or similarly, like, how you can put a certain percentage of your money into a savings account from your paycheck when you set up auto pay at an employer. You can do the same with a small percentage of your paycheck into Bitcoin now with a bunch of different products, which then kind of lets some people feel like they're gaming the system. When it pumps up, they could use their Bitcoin. When it goes down, they hold and things like that. Or just for more responsible people, dollar cost averaging for the long term. I think, Phil, you were going to say something more.
Yeah, I was just going to add that I think I agree that as more adoption happens, Bitcoin the fluctuations will decrease and the volatility will decrease. Right now, it's just, early adopters, right? I mean, if you really want something that doesn't fluctuate, then there are other cryptocurrencies or pseudo cryptocurrencies like USDC and US Tether, a US dollar Tether, and there's DAI and some of these other kind of dollar pegged or dollar value pegged cryptocurrencies. The problem with those ones is that, of course, they're not as well known as Bitcoin is, and so you have to jump through a few more hoops to accept it. Like, I bet most people haven't heard of USDC or US dollar Tether, other than those of us who are already kind of living and breathing in the space. So, when you ask your customer, well, we accept these other cryptocurrencies, they'll be like, well, where do I get them? What exactly are they? And, once as the vendor, when you accept these cryptocurrencies, what you really want is just cash, right? Fiat money, to pay your bills and your vendors and all that stuff. How do you convert it? So it's sort of like a chicken and egg problem right now. So, as we get more adoption, that volatility is going to go down.
I'll add that ironically, you have Ecuador down in South America that has made Bitcoin legal tender. It's much more stable than its own inherent currency.
That's right. I was going to say that it's more
Yeah,
stable than their own currency.
If you are in the wrong environment from the fiat monetary perspective, Bitcoin starts to look pretty good. So that's and we just bridged into another question. Ron Miller has asked, what is the appeal of cryptocurrencies that strike their price to an existing fiat currency, such as the dollar, euro, et cetera? And from a legal perspective, one of the things that does is it really takes it out of the world of being a security. And I'm not going to get into kind of the technical legal of the Howey test and when is a cryptocurrency a security, other than to say that if there's no chance of the thing going up or down in value as measured against fiat currency or such, then the SEC does not look at that as an investment for a profit any more than it would say holding dollars or euros as an investment for a profit. They don't regulate currency transactions. A slight twist on that, if you've got a token that's backed by an asset like gold, for instance, and it is actually gold in a vault as opposed to gold in the ground, that is falling under the rubric of commodities, and the Commodity Exchange Act and CFTC would regulate those. As far as why, from a practical standpoint, you would want to have something that is what we call a stable coin, I'll toss that out. George, you want to give kind of the basic use cases for when you would want to hold Tether or USDC or something of that nature?
Yeah, one of there's two big reasons I think that stablecoins have kind of value in a place. One is just ease of having something that is maybe when you're in between different assets and you don't know what you want to hold and you don't want to deal with the you in your mind doesn't think like I'm Bitcoin denominated. A lot of people still think US dollar denominated or whatever their local currency is, right? So if your base way of thinking is, hey, US dollars or yen or whatever, when you're in between assets, instead of holding the cash asset, you might choose to stay digital. These days, it's actually fairly easy. A lot of things have some trading pair where you can go into the fiat asset class if you want, but for a lot of people, they choose not to anyway, or they're in wallets that don't actually have that capability to hold fiat, and therefore, but they want that fiat exposure because that's what they denominate for. And that's not necessarily criticism as to what they believe in or not. For example, if you are a US taxpayer, there might be a reason why you think in US dollars terms, because even if you don't, you're going to be forced to at the end of the year when you tally up taxes, right? So that's one version of why people might use stablecoins, just because it's a good place to park the money while you're thinking about what to do with it next. Another reason is because, for the same reason that Joe had mentioned earlier, sometimes things fluctuate, the pricing, and people think a certain way. Having a stable coin helps a lot of consumers think about the product and how they spend a little bit easier. If you've got something in 1 second it's $15, in a second it's $8, etc., sometimes that gets tricky, and you could modify that by saying, well, now it's 0.02 Bitcoin, but now, never mind, now it's 0.017 Bitcoin, etc. But if you price it in stable coins, it helps people think a little bit more clearly. So those, I think, are the two big use cases. There's some other use cases, but I think those are like the two dominant ones.
Yeah, I would just add also that, there's this kind of growing industry called decentralized finance, and stablecoins in that sense is a very important part of that ecosystem, right? Essentially, how is it possible that you can earn 7, 8, 9, 10, 11, maybe even 12% on stable coins that are pegged to the US dollar or some other currency? Well, the reason you can do that, there are a lot of scams out there too, but let's talk about legitimate.
Not investment advice, to be clear.
Right.
Yeah, not investment advice.
Clearly not investment advice, but I will just say that this is one way of kind of like democratizing finance for people who need it from people who have it. Because now you can take your stable coin, go through a decentralized finance platform and lend it out to people who need it, but don't have access to traditional fiat capital, right? They don't have a bank account. They don't live in a country that has a stable banking system. They don't have reliable debit card interchange payment rails or acceptance rails. And so this is the only way they're going to get leverage or access to capital. And this use case for stablecoins allows this to happen. And this is a very important aspect. Without stablecoins, I don't think we would see a lot of the growth in the decentralized finance space.
Yeah, I think that's right.
100%.
Yeah, I agree. And for anybody who's wondering, DeFi is decentralized finance. I'm also internally chuckling at this discussion because I've got one notable client who refers to dollars as government money with disdain, I will add. So there's that.
I think that it's, like the big thing is that there's crazy volatility in a lot of these tokens, right? And we talk about the stable coins, and Phil put it perfectly with how it's used in DeFi. We wouldn't have the DeFi space the way it is without those stable coins. It's also, the stable coins are, the reason why probably people are looking at the government money with disdain is inflation and all the things that the governments do. They're still affecting these coins because they're pegged to those coins.
Yeah.
But the digital aspect of them, the reason why crypto is so exciting and can be utilized by smart contracts, can be utilized by these decentralized products, are why stablecoins are so exciting. They don't have maybe some of the other exciting features of maybe pegging them to the Ethereum blockchain or whatever the heck another token might have, but they're pegged to the dollar, and they have the bells and whistles and innovation that the rest of crypto has. So we can do cool things with them that can't be done with a dollar, or we're not allowed to do because we're American. But that's where Josh can keep people in line.
Yeah, and that is definitely tricky to do that these days. You mentioned the word smart contract, and we haven't really talked about it much, and I think we'd be remiss not to. So for anybody who's listening, smart contract does not mean we're putting all lawyers out of business, as appealing as that might seem to some. What it really means is self-executing contract. What that translates to is a contract that will recognize, and don't worry about how right now because it's a little bit technical, but it will recognize a real world event of some type. That might be as simple as, Bitcoin is worth X dollars at X time, so therefore your option contract did whatever. Or it might be something as simple as I received delivery of my, Mazda Miata, and therefore, the contract has been fulfilled, and we'll then execute on that. And oftentimes the other side of that execution is some type of payment. For instance, whatever it was that I paid for my Mazda Miata. No, I don't actually own a Mazda Miata, for anybody who's wondering. But that's a very important thing, is what that just did. Is it acts as something of a great disintermediator. Everything that is in escrow, everything, and by the way, don't take me literally with everything. There's still some very good reasons for escrows to exist, but a lot of escrows, a lot of things where there are brokers that broker transactions do so because there's a trust problem. The parties don't know each other. They have to exchange things. Nobody wants to exchange first. So, therefore, you have somebody in the middle who's a trusted intermediary, and a smart contract in a lot of ways can do away with that. And I say can because the devil is really in the details. The problem really being that once you've got the smart contract in place, changing it can be problematic. So, you'll hear people, and I'm bouncing around a little bit, but you'll hear some people say code is law when they're talking about smart contracts. Thank you, George, shaking his head. There is a future where actually it is true that code is law, particularly look at some of your metaverse environments. But then you're going to have a question which is, do you want to choose law where code is law, period, end of story? Or do you want to choose law where there's hundreds of years of case law and precedent and exceptions and, oh, the parties didn't really mean that, to kind of cover up for some of the mistakes you might make when you actually write the thing. And that's certainly a direction we're going. And Jor, any thoughts on code as law? I saw you kind of make a face.
You know, there's a lot of people have come up with that, and code is, you know, at best it's contract, but it's not even really contract, right? So for the, you know, for smart contracts, they're really great when you can, if you think of things like if then statements, if this happens and then, you know, this will happen, and if both of those are things that can be sourced digitally with some amount of accuracy, smart contracts work great. They're better than humans probably. The issue with smart contracts and the way they're called is, it's just, you know, let's just call it a program or a code, right? The problem with code is that if you're trying to use it to actually replace an agreement between two parties, there's a reason why contracts, you know, exist. There's a reason why lawyers exist. There are certain things that, you know, that still to this day require some sort of subjective human judgment, that are difficult to put in a smart contract. And any one element by itself might not be that difficult, but the nature of things are that most things have multiple elements, right? So you might have a smart contract that has a very, like, if this happens, then I pay you. But, you know, on top of that, you might have confidentiality provisions, you might have indemnities, you might have, you know, arbitration and things. Some of them you might be able to move and find some digital kind of like governance mechanism to you know, see what happens if there's a dispute, etc. Some of these things like indemnities, etc., we haven't gotten to a system where we really can automate that human behavior easily, which is why courts exist, right? Which is why people fight. So in those instances, smart contracts kind of fail. So I think for anyone that's using smart contracts, you know, for escrow or for any other reason, you really have to think about what you're trying to achieve from a business perspective, from a legal perspective, and then whether a smart contract or software code effectively can actually replace all of that. Sometimes it can, a lot of times it actually can't.
Yep. So lawyers aren't going to go anywhere, at least not for a while.
I do think that, you know, if you think about smart contracts from maybe a financial product perspective, there's some really, really interesting things. And I'm not going to even say, because like if it doesn't necessarily mean decentralized, it could mean a securities product, right? Like a digital version of an investment that used to be on a piece of paper can be done so much more efficiently. The sort of waterfall of distributing funds could be done so much more efficiently and could be done instantaneously without, you know, the banks and the products in the middle that maybe cut a lot of the fat out. And maybe that's how some of those products that Phil was talking about get a higher percentage yield, because you don't need some of those products. But even when you're talking about digital distribution of assets across the globe, across different jurisdictions and things like that, smart contracts can be used to create frictionless, both parties agree on something, instantaneous swaps and things like that. That could be real estate transactions. They could be anything. And I'm seeing a lot of companies working on those things in a really, really exciting way. And they don't look like, you know, delivery of a car, basic contract kind of things. And they also don't look like the decentralized stuff. Like they could be really sophisticated, basically comply with different jurisdictions, different asset classes, and do things when you start taking these mechanical, smart in the sense of like a phone versus an old phone, right? There's just more features and more things and bells and whistles that can be done and also automated, that are getting really, really exciting. But it doesn't replace the human interaction. In fact, every good smart contract probably is consulted with a really good lawyer. And there's legal contracts that are connected with both parties participating in them, which is why a lot of them won't be decentralized in that way. But it's so many amazing things could be done with this kind of technology.
Mm-hmm. Yeah, and to emphasize, the smart part is the execution, not the negotiation, the entering into. I mean, they're very useful for things that are supply chain oriented, for things that are, option and futures oriented. And, as Joe pointed out, you're unlikely to see one hit, in the confidentiality world, or, non-solicitation of employees, or anything of that.
Yeah, and sometimes it's not. Sometimes it's too much credit of smart contract goes toward the blockchain. For example, like if you go Google, you'll see like Walmart did some smart contract, to track, the source of their food.
Yeah.
And they use IBM. So they took a process that, that normally might take them 2 weeks to track the origins of something, and they got it down to like 20 seconds or something like that. In reality, they could have done that without the blockchain, and it probably still would have gotten down to 20 seconds, if not faster. So like, smart contract, by itself, self-executing code, that exists already. That exists before the blockchain. So a lot of times I think people say, and they mean blockchain, and when we say it, we mean blockchain as well. But self-executing code has existed, if you're on an online casino gambling, and you put in the chips and dealer turns over 21 and you lose your money, that's a smart contract, right?
So, although, I mean, just to clarify, the reason we all kind of assume that now is, combining it with, the blockchain adds kind of this auditable, open, easily.
When there's more than one party, right? If Walmart owns their whole supply chain, it doesn't really matter. Like what is I think what Jor is saying.
Yes.
Like UPS auditing their own paper trail, it doesn't really matter. It's maybe a marketing move, but when UPS does a deal with maybe a different logistics company and they need to verify each other's stuff, it creates a little more trust.
Yeah.
Right.
Agree.
Right. And I know that one of the things with Walmart, I mean, you're tracking listeria and lettuce in that particular example, and it was going back to individual farms, and that was kind of the idea of why that was something. I think there was actually VeChain did that in China as well, and it's a pretty decent use case. Okay, so we're getting close to the end. It's less than 10 minutes to go. In terms of the 73 participants who have still been here, we lost a few along the way. I'll try not to feel personally hurt. Is there anything that you guys would want to say to people just who are not in the space, but just business people in general, as far as how they should be thinking about future going forward with respect to blockchain and related technology? And I'm gonna have to call on somebody. All right, Phil, what do you think?
I think people should have an open mind to this technology. We're seeing some really interesting stuff. I mean, when I first tried to explain what an NFT is as a collectible, people are like, well, it's reproducible, and the reproduction is exactly the same as the original. But, if I showed you a really good reproduction of the Mona Lisa and I hung it right next to the Mona Lisa in the Louvre, would you know what the difference is? So it's still the same thing. But in this essence, what an NFT is really bragging rights, and that's what collectibles are. Collectibles are bragging rights. So if you look at it in that sense, that's the way to think about maybe some of the things that are happening on blockchain technology. And I hope that what we've talked about today opens some people's eyes up on things that can happen with blockchain technology. This isn't a fraud, right? A lot of people think it's a fraud, but I mean, just for example, the use of stablecoin as a payment rail, right? If you were a purchaser here in North America and you wanted to buy something from someone in like the Czech Republic or something like that, and you didn't have a bank there and your bank didn't have a bank there, you know how painful that process is? You need to go through a correspondent bank, which means essentially that your bank has a bank account in a foreign bank, but it isn't their bank. And so that whole reconciliation process could take up to 14 days before you actually pay for your supply or you get your supplies released. If you used a blockchain technology, you could do that instantaneously. So, that's what I would say, that, you should think about, the possibilities of blockchain if you're new to the space.
My statement as well is to be very, very open-minded, because exactly what I think, Josh, you said at the beginning, or maybe it was you, Phil, talking about 1995 and some of these talks about the internet and how we were talking about the internet. And, I bought something on eBay at beginning days of eBay. I had to go to the post office to get a cashier's check or whatever, a money order, whatever you get from the post office, send it in the mail to this dude. Didn't end up sending me the stuff that I bought on eBay. As 14, 15-year-old version of me it was a huge, meaningful amount of money, like $60 or something. And PayPal came into fruition a year or two later to fix that problem, right? And that's where we're at today with crypto and with blockchain in general. I would say with blockchain in general. I wouldn't say crypto specifically, because it's getting into to games. It's getting into some of these places where maybe new technology is adopted first, but it's going to be everywhere. And I tell people constantly that if you don't at least participate in this space and learn a little bit about it, you may not be one of the first people in line to get a job 10 years from now, right? You need to know this stuff. You need to participate and just be open-minded to it. I'm not telling you to go buy Bitcoin. I'm not telling you to buy Doge or stake your USDC and earn 10% somewhere. What I'm telling you is just be open-minded to it, learn about it, and just understand that like there is a use case for you and your industry here, and it'll find a way, because it's going to be exactly like internet companies. When startups used to be internet startups, it used to be like, oh, I'm starting an internet company. Every company is an internet company now. Nobody goes, I'm starting an internet company. They're just starting a startup, right? And nobody in 10 years is probably going to be like, oh, we're doing this blockchain thing. They'll be like, no, we're making a game where you can earn points to do something. It's Roblox, but you can transfer it a different way or whatever. Because kids are natively digital now. My kids who are in elementary school get NFTs way more than you would ever think. And to them, a digital version of a Pokemon card is better than the paper one. To us, the Spawn #1 comic I still have in a drawer at my parents' house is really important to me. It might be worth $20. I don't even know, right? But that's cool to me. But the digital version is way cooler to my kids and to your kids and to everyone who's becoming digitally native. Most of these people grew up with cell phones, right? Like cell phones existed always to them. They didn't have a day where they drove a car without a phone in their pocket, like all the rest of us did. So, that's the beauty, right? And it's going to be synonymous with digital. 10 years ago, when a company raised money and you signed docs with DocuSign, that was a digital document. That doesn't count as a digital document anymore in the eyes of technologists. There's nothing digital about it other than it's on the computer, but it still needs to be printed. It's the same forms and same paperwork that was there before. So I just want people to be open-minded to this. Don't just be like, oh, Alon, that crazy crypto dude, he's talking about apes and NFTs and all sorts of BS. Like, that's fun for me, but it's not our lives. It's not everyday life. That's the gateway into it becoming everyday life.
Right on. Jor, any last thoughts?
Yeah, I think just echoing a little bit about what Phil and Alon said, don't get lost in the rhetoric that it's used by criminals and it's, speculation, et cetera. Think about how you think about anything else, right? Like when there's email scams, there's email traffic, when there's internet, there's poor uses of things and there's good uses of things. When you think of it and you look at what it is, and it's just technology, it's database technology, it's not going to be useful for every single thing, but it's going to be useful for a lot of things, right? Don't let the rhetoric of this don't let the investment rhetoric and the gambling rhetoric and all those things impact how you view whether the technology is actually useful or not. If you think about it, kind of like Alon says, there are a lot of applications where it actually makes a lot of sense. It actually could improve the system, make it more efficient, make it more reliable, make it easier for you, make it cheaper for you, perhaps. And if you actually take the time to kind of analyze these, there are actually really legitimate purposes for blockchain. But you just have to get away from some of the rhetoric of like, oh, it's speculation, et cetera. Those are just people looking at one aspect of it. you can totally be, I'm famous for being a crypto skeptic. You know, Alon gave me some of the very few Bitcoin I have. He gave me like $10 worth. Now it's like $60 worth. But I'm a crypto
Oh, yeah.
skeptic, but I believe in the product and the technology. And I think, you know, I'm very strong proponent of it from that perspective.
Yeah, and I guess the last thing I would leave people with is definitely open-minded. Also recognize this for what this is. Most people don't really have the capability to analyze stocks the way a professional analyzes stocks. And most people don't have the ability to analyze cryptocurrencies or digital assets the way a professional analyzes cryptocurrency or digital assets, including me, by the way. I'm a lawyer. I'm not a finance guy. The reality of most of these is that there is either some kind of a use case that actually drives the demand, which drives the value, even though it fluctuates massively, and that use case will succeed or not. Or you've got something meme oriented like Doge or Shiba Inu, in which case, you know, you're rolling the dice, but understand that you're rolling the dice. I will say this as investment advice, if anybody's watching, just never spend more than you can afford to lose. That's kind of a good way to end. And I see Dennis is back with us, so I think we're rolling towards the end.
I'm coming in. I gotta call time on this. Absolutely amazing. Like seriously, I think a lot of us on here have spent the last 2 years in virtual land, in one-dimensional Zoom kind of conferences, content filled of a million different disciplines. It's very difficult to keep attention for an hour plus, an hour and 15 minutes in a topic. This is just such a riveting, it's a riveting industry. It's materializing at breakneck speed. That's super interesting, by the way. I didn't know about JPM, the JP Morgan holding so many patents in that space. I hear about it internally. They've got a lot of development going, but I didn't realize at that level. It's interesting. But just Josh, great job keeping conversation going. Jor, Phil, Alon, awesome subject matter experts, deep bench, obviously know the technology, have a vision for it, and it just has it sounds like an infinite amount of uses coupled with infinite amount of moving pieces right now in its development. We're watching it unfold in real time. And if there is a single takeaway, I think from tonight, at least for me, it is the term digitally native, which is super fascinating because I'm trying to understand. And I mean, I want to stay cool, want to stay hip like the rest of us, but the digitally native folks it's like learning a language. If you grow up as your first language speaking that, you're probably going to be pretty good at it compared to those trying to learn it. And it's just a really interesting viewpoint to look at. So thank you all for your participation tonight, for keeping us entertained and educated. It's a good day when you learn something new. And for everybody that was on, thanks for your time sharing the evening with us. Do look out for February's event. We're going to have an awesome 1 year later event going on. You don't want to miss it. I don't want to give all the details yet, but watch for the emails that are coming out from ACG. If you are not a member or not on our mailing list, please do go to just Google ACG 101. It will take you to our homepage and contact information is on there. Looking forward to an awesome 2022 and beyond. Panelists, sponsors, board, moderator, chapter executive, and attendees. Thank you all for your time tonight, and we'll talk to you all and see you all soon.
All right. Thanks, Dennis. Bye all.
Thanks.